Okay, Dave Ramsey, it's no surprise, he is an enemy of infinite banking. Is he right? Let's dive in. Okay, if you've ever watched Dave Ramsey before and you've heard infinite banking and Dave Ramsey mention the same sentence, it's usually he hates it. He hates every bit of it. The thing I want to talk about in this video is where is he right, but also where is he wrong? Where could he be not clear that maybe it's confusing you more than it should be, and what can you actually use in a way that maybe Dave Ramsey doesn't understand himself? Let's dive into that in this video right now. All right, so Dave Ramsey, infinite banking. Those two things usually don't go well together, right? Because if you pull up anything on YouTube here, by the way, subscribe to our channel if you haven't done so already. If you go at anything on YouTube, you'll see that Dave Ramsey is constantly always ripping on infinite banking. You always get that caller calling in saying, hey, Dave, I've been looking at this infinite banking thing and I think it's better than you say. And he's like, no, it's dumb, it's stupid. You shouldn't do it at all. Let me guess, they told you paid up additions, did they? No, it's dumb, it doesn't work. You shouldn't do it. Put your money in the stock market, you'll make more money. Okay, so we know he hates it. It's no secret, right? But we also know he still tells you the stock market returns 12% a year, which has been never true ever since before, right? We also know that he says a lot of things on his show that aren't really true. Heck, he even argued George Camel, telling his own co-host that he was wrong when his co-host said the 3% rule is the actual retirement rule that other retirement institutions say is true. Yet Dave Ramsey says, no, you should be able to pull out 8% or 12% a year. Nope. Sorry, Dave, we ran the calculations. Apparently the calculator's not your friend either. So anyways, I'm digressing. Let's get back to infinite banking, right? Because it's the same thing. Now, I agree with Dave Ramsey on this front. Most of the time when you hear about infinite banking, he's right. Most of the stuff I've seen with infinite banking doesn't work. My experiences was when I first learned about infinite banking was when I got into real estate investing, right? I was a financial advisor, never heard about infinite banking before. When I realized that financial advising didn't work, all the stuff that Dave teaches doesn't work either, that's when I started going to real estate investing because those people were actually rich. While the financial advisors only made money on commissions, they never made money in those investments. Neither did their clients. So I went to real estate investing. And then these guys started talking about this infinite banking concept and stuff by Nelson Nash. So I read the book and I started to drink the Kool-Aid and I bought the policy. Even though I had a life insurance license, I still bought the policy because I didn't know how it was structured. I didn't know how to design it. But I remember looking at the numbers and I started thinking much like what Dave Ramsey did. And I said, well, hold on here. This looks really expensive. In fact, look at these first few years. It's all going to pay for the death benefit. Nothing's going into my tax-free savings account, this cash value account. Are there different levers I can pull, like I knew I could do with other types of life insurance? There's different levers I can pull to give me more money. The agent said no. So I took his word for it. I said, all right, I trust you. You seem like a great guy. I'm going to buy it. This is in 2006, by the way. This is almost 20 years ago. 2 years later, you guys know what happened. If you happen to watch any of the news or you were alive then, unless you're 10 years old, you have no clue what happened. And if you're 10 years old, I'm impressed you're even watching this video right now. But you remember the recession hit us at that point, right? The recession hit, it sucked. Now, me being in real estate, and I launched a new company with some partners in 2007 who were also focused towards real estate investors, we were getting hit hard. I went from millionaire to upside down millionaire during that time. I was over $1 million in debt eventually by 2008, 2009. On top of that, I was in the hole. The main reason I started going into debt because I was in the hole every month now. I was in the hole like $15,000 a month. I couldn't afford to pay these $1,000 a month premiums to this whole life insurance policy. Well, that wasn't going into my third year. When I asked the insurance company, hey, is there a way we can make this easier? They said, no, you don't pay the $1,000 a month, you can't keep the policy because there's no cash value. There's nothing in that tax-free savings account that you can use to help fund the policy. So I lost it. I put 25 grand into this policy and it went down the toilet, okay? I was a little bit mad, but I didn't really blame the agent because I just figured that's just the way it is. However, months later, I'm talking with a friend and we start to realize maybe there were some things we could be doing. And so I started running my own numbers because again, I had an insurance license. So I started doing my own research. And I started to find out there were levers he could have pulled to give me cash from day one, not waiting 3 years before I had to find a few bucks out of the 25 plus grand I paid in. But no, day one, I could have cash in there. And so I went and I confronted this agent. I sat down with him and I started showing him the numbers. And he tried to come out with all these different things. Oh, you can have a higher death benefit. You should have that. And all that kind of stuff. After 2 hours of debate, he finally just said, Chris, I did it that way because I couldn't afford to cut my commissions. I said, there's the truth. There it is. That's it. And I'm never sending my friends and family to you ever again. And so it kind of became my mission ever since then, really almost over the last 15 plus years, now going on almost 20 years, to keep making this better so that it does get a better return, so that it actually made sense for me as an investor, because I didn't want to get duped by another insurance agent again. And so I started finding ways to do it to where instead of having nothing for 2 years straight, I actually had a lot more of something. So for example, I just had this insurance agent send me this policy from a good company, a company that I use all the time for insurance. And guess what? She's putting in $60,000 a year, $5,000 a month she's putting in this thing. After 3 years, she pays $180,000. Guess how much she has in there? $30,000. That's after all the insurance costs, everything come out. Now granted, you always have to have some insurance costs in those first few years especially, right? But when we design it, instead of waiting 15 plus years before you finally get all your money back, we do it in 5. And so those first few years, there's that net cost, but that same $60,000 she would have put in the first year, guess what? She would have $50,000 in there. Second year, she would have over $108,000. Third year, guess what? Now she's got like $170,000 in there after 3 years of the $180,000 she paid in. By the 5th year, she's got over 200, whatever grand. I can't remember. Do the math. No, 300 grand. I guess it is. Aren't you glad I'm using a calculator right now? Right? Anyways, so she had way more money. And so when I realized I could design it this way, I started to use it for myself again. And that's what Dave Ramsey has wrong about infinite banking. He talks about those paid up additions, and yes, that's part of the secret, right? But the real secret is this: how do you lower the insurance costs as low as you can while maximizing the cash you put in? That's the key. And unfortunately, either insurance agents don't know how to do it, that's the vast majority of them, and of those few that actually do know how to do it, because that's their career, they know that if they actually do this strategy, they get paid a lot less commissions, like 80% less of commissions. And so they don't want to do it, or they'll do something in between. Like there's some YouTubers that talk about infinite banking, they're popular, they'll say, well, I'll just go in the middle. So instead of having, 20% of your money going towards those costs in the first year, I'm gonna have it be 30 or 40%. It's still good. It's still better than 0% going, or all 100% going to those costs. Yes, but you can reduce those costs more. That's why we call it max ROI infinite banking when we do it. I can guarantee you Dave Ramsey doesn't know about this, and let's be honest, he doesn't care to know, because he makes all of his money and all the stuff he does off of keeping the same opinion that he's had for the last 30 years, even though the world has moved on and all the stuff he teaches has become false. Okay, I can't say all the stuff he teaches is false. He's got great stuff on budgeting, debt to some level, whatever, but when it comes to making money, he doesn't really care to learn more about this stuff. That's where infinite banking, it's not all created the same. It's not all equal. You can't just throw it in one big bucket. When you try to make everything absolute, saying it's always this, it's always that, just like I was saying, everything Dave Ramsey says is not true. That's not true. Whenever you make it something absolute, that's when you know they're not being true, right? That's when you know they're lying. That's the thing. He's true so much of the time. He's correct when it comes to infinite banking, but infinite banking can be done in a way that's even better. And yeah, you could still invest in his cruddy little mutual funds that he talks about too, and have money in that life insurance and actually create it better. They've actually done models where if you have a combination of growing your money, could be in the stock market or something else like real estate, and using whole life insurance, you actually have a bigger odds of success. 1, having a better retirement, and 2, even passing on more money. That has been proven with all the models that independent studies have already found. So yes, infinite banking can work, but it has to be done a very specific way. If you want to figure out what that way is, you can also go to moneyripples.com. There's an infinite banking section to show you what that actually looks like. Go visit that right now.